guys, this is the fourth discussion video on gross income, and in this video we'll discuss more on the passive income. Remember that in our previous video we have mentioned that there are four sources of income. First, the compensation income. Second, we have the business or professional income. And third, we have the passive income. And fourth, the capital gains. So in this video, the fourth discussion series, we have the passive income. So what are these passive incomes and how are these treated for income taxation in the Philippines? So let's jump in. A passive income is an income resulting from a cash received on a regular basis, requiring minimal to no effort by the recipient to maintain. So, as clear as it is, when we say passive income, it means that the income is regularly received, or maybe not regularly received, but there is a minimal or no effort on the part of the recipient or in the part of the taxpayer. So, unlike the business and compensation incomes in which the taxpayers to exert effort to earn those incomes, in passive income, there is only a minimal or no effort at all. So, as a rule, all passive incomes are generally taxable. So all passive incomes are taxable. Like every other incomes, they are all taxable. However, there are some exceptions, of course. So passive incomes earned within the Philippines are subject to final withholding tax. So there, when we say final withholding tax, it means to say that if you are the taxpayer receiving such passive income, before you would receive that income, there is already a tax deducted from it. Okay, so for example, let's say for example, dividend. So before you receive the dividend, there is already a tax withhold and deducted from that dividend. Okay, so that is an example of a final withholding tax. Okay, so again, all passive incomes earned within the Philippines are subject to a final tax unless exempted by the law or unless these passive incomes are subject to graduated rates. When I say graduated rates, these are the normal rate tax rate for individual taxpayers or for corporations. Okay? So, a normal tax or a regular tax is a graduated tax rates, and we have this 20%, 25%, 30%, 32%, and 35%, which is applicable to individual taxpayers. Again, whenever I say normal tax, that is what I meant. Okay, the graduated rates, the tabular rate, which is normal for all individual taxpayers. But if I would say normal tax on corporations, what I'm trying to say is the 30% normal tax on corporations. Okay, so normal tax is different from the final tax. Okay, so let's go to the next. So there are some exemptions, however. Passive incomes earned outside of the Philippines are not subject to final tax. Why? Because our final tax system only operates within our jurisdiction. So, for example, if you are a resident citizen and you are earning passive incomes outside or from abroad, then that those incomes cannot be subject to our final tax. Okay? However, such incomes are added to our gross income as non-operating income and therefore subject to graduated rates or normal tax if the taxpayer is a resident citizen or a resident or a corporation. Okay? So always remember there are only two taxpayers in the Philippines who are subject to global taxation. When I say global taxation, meaning to say when they earn incomes from within the Philippines or outside the Philippines, they are subject to tax. So these people are the resident citizens and domestic corporations. So every income that the resident citizen and the domestic corporation earned from outside and within the Philippines are subject to tax. Okay? All the rest, the non-resident citizens, the resident aliens, the foreigners, are only subject to tax for their incomes earned within the Philippines. So, if the passive income is earned outside of the Philippines, again, they are not subject to final tax. Okay? But if the taxpayer receiving such income is a resident citizen or a domestic corporation, then those incomes, those passive incomes earned outside, are added to their gross income as other non-operating income. If the taxpayer who earned these passive incomes abroad is a non-resident citizen or a foreigner, an alien, so they cannot be subject to tax. Okay? So passive incomes, again, earned within the Philippines, which are not subject to final tax as appropriately provided by the law, shall be subject to normal tax, the graduated rates. So, as what I've mentioned a while ago, every passive incomes earned within the Philippines are subject to final tax. However, there are some passive incomes which are not earned in the Philippines which are not subject to final tax. And when these passive incomes which are not subject to final tax and are earned within the Philippines, they would be subject to the normal tax. So let's go to our first example of passive income. We have the interest income. So, interest income is a revenue earned by a lender for use of his funds or an investor or a depositor on their investment over a period of time. So, if you are a lender or depositor and then you received interest out of your investment or out of the debt you let someone to borrow from you, then this interest income is considered as passive income. So there are a lot of uh, types or transactions that there are a lot of taxes applicable to interest income. So number one, we have 20% final tax. So interest income earned from any currency, bank deposit, and yield or any other monetary benefit from deposit substitutes and from trust funds in similar arrangement in a short term deposits or investments only, provided that this interest income is earned in the Philippines. So again, in short, if you are having a deposit, okay, whether it's peso or not, and this deposit earns interest within the Philippines, then that interest rather is subject to 20% final tax. Okay? So before you would receive the interest income, before the bank would credit the interest on your account, the bank would automatically deduct the 20% final tax. Okay? So another tax we have is the 15% final tax. So this 15% final tax is for interest income received by an individual taxpayer, except a non-resident individual or non-resident corporation from a depository bank under the expanded foreign currency deposit system. So what is this expanded foreign currency deposit system? So an expanded foreign currency deposit system is actually a unit of a local bank or a unit of a local branch of a foreign bank wherein it is approved by the BSP to operate for foreign currency transactions. Okay, so any interest derived by a resident citizen or a resident alien or a domestic corporation shall be subject to a final tax of 15%. Always remember, non-resident individual, whether non-resident citizen or non-resident aliens or non-resident foreign corporations, they are exempted from the 15% final tax. Okay? Next, we have exempt from the tax. So there are also other interest incomes which are exempted from the tax. These interest incomes are derived from long-term deposits or investments in the form of savings or common or individual trust funds, deposit substitutes, investment management accounts, and other investments evidenced by certificates in such forms as prescribed by Bangko Sentral ng Pilipinas or BSP with at least 5 years remaining maturity. So always remember, if that long-term deposit is if the maturity of such deposit is 5 years or more than 5 years, then any interest due or earned from those deposits are exempted from the tax. Okay? The 20% that was mentioned before or a while ago is only applicable to those deposits which are short term, okay, or not more than 5 years. So the income tax exemption can only be enjoyed if all of the following conditions are met. So first, the depositors are individual citizens or resident aliens or non-resident aliens engaged in trade or business in the Philippines. Okay? So meaning to say, if it is a non-resident alien not engaged in trade or business, or if it is a corporation, then that interest income cannot be exempted from the tax. Okay? So the exemption is only applicable to individual citizens, non-resident aliens, and non-resident aliens engaged in trade or business. Next requirement is the long-term deposit or investments must be issued by banks only and not by other entities. Okay? And this must also be issued by banks in denominations of 10,000, at least 10,000. And these deposits should not be terminated before the end of the fifth year. So the depositor individual should wait for the maturity of the 5 years maturity before it could withdraw the investment. Otherwise, they shall be subject to the graduated withholding tax rates based on the age of deposit. Okay, so we have a graduated rate. So for example, if the maturity is 7 years, so any interest would be exempted from the tax, right? Because it is long term. However, if the depositor decides to withdraw the investment or the deposit before the fifth year or before the maturity, then the following rates shall be applicable. So, also exempt those specifically exempted by the law. Any other income, such as gains from trading or forex gain, shall not be covered by any income tax exemption. So these are the rates applicable when such long-term deposit or investment is pre-terminated before maturity. The following final tax rate shall be based on the remaining maturity of the investment. So we have here, if it is 5 years or more, if the remaining maturity is 5 years or more, we have it is exempted still. But if it is 4 years to less than 5 years, we have 5%. And if it's 3 years to less than 4 years, it's 12%. And if it's less than 3 years, it's 20%. So the taxpayer individual should always think whether to withdraw these deposits or not for tax avoidance, of course. So interest income earned outside the Philippines shall be subject to normal tax. Okay? Again, as I have said, the final tax cannot be enforced on incomes earned outside of the Philippines. But if the receiver of such income is a resident citizen or a domestic corporation, this interest income earned outside the Philippines shall be subject to normal tax, therefore added on their gross income because they are subject to global taxation. Okay? So additionally, interest income earned from a receivable as a result of a contract between the creditor and the debtor is not subject to final tax. So, for example, what we have discussed here are those interest incomes from deposits, right? So how about those interest incomes from a credit? okay, arising from a contract between the creditor and the debtor. So this interest is not subject to final tax. However, this interest shall be subject to a normal tax because as I've said, every income is taxable. Okay? So such interest is subject to normal tax if earned outside the Philippines. Such interest shall be taxable on the part of a resident citizen and domestic corporations, therefore subject to normal tax. So example, Margel receives the following interest for the year 2018. So we have Margel received from peso time deposit. This is 60 months. 60 months, actually 5 years at Philippine Bank. So 10,000. From savings account on Oro Banco, we have 17,000. From a friend, Debbie, for her indebtedness, 5,000. From a dollar deposit under the foreign currency depository system in US dollar, we have 500 US dollar. And from a deposit in an American bank in USA, so that is in US dollar, of course, 1,200. And the conversion rate is $1 is to, this should be 50 pesos. Okay, so I'm sorry for that. That should be 1 US dollar to 50 pesos conversion rate. So how must this interest income be treated for Margel? So the question now is, who is Margel? What kind of taxpayer is Margel? Is she or he a resident citizen or a resident alien or whatever? So let's have an assumption. If Margel is a resident citizen, therefore he is taxed whether the interest earned outside or within the Philippines. Okay? So we have here the interest income earned, the amount, and our tax treatment. So for time deposit, which is 60 months at a Philippine bank, this is exempted because again, this is a long-term deposit and long-term deposit is exempted from the tax, or any interest earned from long-term deposit is exempted from the tax. We also have from savings account on Oro Banco, 17,000. So since this is it is not mentioned whether it is a long term or short deposit, therefore the applicable tax shall be 20% final tax. We also have from a friend, Debbie, for indebtedness. So since this is not a bank or interest from a bank deposits, this is just for arising from a credit of Debbie to her or him. So this in interest from indebtedness shall be subject to normal tax, therefore added in Margel's gross income. Okay, subject to normal tax. And we also have dollar deposit under the foreign currency depository system. So since the deposit is under the foreign currency depository system, therefore this is subject to a final tax. And finally, we have from a deposit in US bank in the US. So the bank is in the US and the interest therefore is earned in the US. So therefore, the final tax cannot be applied. However, since Margil is a resident citizen, therefore it will be subject to the normal tax, hence added on his or her gross income. Thus, our solution for Margil's problem would be, we have savings account in Oro Banco, 17,000 times 20%. That is a final tax. And then from the dollar deposit under the foreign currency depository system, we have 500 US dollar times 50 pesos, conversion rate times 15%, final tax rate, a total of 7,150. So all others, the normal tax, all other items of interest which we have classified as subject to normal tax shall be added on Margel's gross income. So interest from a friend, unless otherwise stated, shall be assumed to have been earned in the Philippines. Therefore, though it is not subject to final tax, these are subject to normal tax. So now let's proceed to another assumption. what if Margel is a non-resident citizen? So here we have our tax treatment for different types of interest income. So first, our peso time deposit, which is again, it's a long-term deposit, 60 months or 5 years at the Philippine bank. Therefore, this is again exempted from the tax. From peso savings account in Oro Banco, that is 17,000. Therefore, they subject to 20% final tax. And then from a friend, Debbie, for her indebtedness, again, this is subject to normal tax because this is not a deposit or savings deposit. And from the dollar deposit under foreign currency, this is exempted because, again, the 15% final tax is only applicable if the individual is a resident individual. So whether it's a resident alien or resident citizen or domestic corporation. So other than that, if the taxpayer is a non-resident, whether citizen or alien, then that is exempted or they are exempted from the final tax of 15%. We also have an interest from a deposit in US bank in the US. So again, there is no tax applicable here because Margel is a non-resident citizen. And as a non-resident citizen, he or she is only taxable for incomes derived in the Philippines. But since the interest is derived from the US bank, therefore there is no tax applicable. Okay? So our solution would be the interest from savings account on Oro Banco times 20%. Therefore, this is the final withholding tax. That's it. So all other interest, as we have mentioned earlier, shall be subject to the normal tax. Okay? So, third assumption, we have Margel as a non-resident alien not engaged in trade or business. So, in this scenario, it would be different. So, again, we have here the peso deposit. In this case, Margel is now subject to 25% final tax. Why? Because the exemption is only applicable to resident citizen. Okay? Residents, residents and citizens. So this, in this case, Margel is a non-resident alien not engaged in trade or business. Therefore, the final tax shall be applicable or imposed upon him or her. We also have the savings from account on Oro Banco. Again, it's 25%. Always remember that if the taxpayer is a non-resident alien, not engaged in trade or business, most or almost all of his income or her income shall be subject to 25% final tax. Also from Debbie, again, the normal tax will not be applicable to Marshall because again, he or she is a non-resident alien, not engaged in trade or business. And from for dollar deposit, since Marshall is a non-resident alien, is a non-resident, therefore he or she will be exempted from the tax. And for the interest earned from US bank in US, of course, he is there will be no tax because the interest is earned outside of the Philippines and Margel is a non-resident alien. He is only or she is only taxable for her incomes or his incomes derived within the Philippines. So as our solution would be, we just add all together those amounts, the peso time deposit from savings account from a friend of Debbie, then multiplied by 25% final tax, we have 8%. So before Margel would receive this amount, okay, so the payer or the giver of such interest shall automatically deduct the 25% final tax. Okay, so aside from interest income, we also have royalties. So royalties is a payment received for the use and exploitation of artistic or literary works, patents, and mineral rights. For example, royalties for the use of copyrights, trademarks, and patents, and royalties from extraction of oil, gas, or minerals. So the applicable tax rate is 20%. This uh, final tax is applicable for royalties earned from the use of copyrights, trademarks, and patents, and non-literary compositions such as royalties for mining or oil or gas extraction. However, the 10% final tax is applicable for royalties earned from musical and other literary compositions. So if you are an author of a book, and you are receiving royalties from the publisher or whoever is publishing your your book, then your royalty shall be subject to 10% final tax. Other than that, if it is not, or if it is not a musical or literary compositions, then the 20% final tax shall be applicable to you. Always remember again, royalty income earned outside the Philippines shall be subject to normal tax if earned by a resident citizen and domestic corporation. Okay? So next we have prizes. So a prize is anything given as a reward to the winner of a competition or race in recognition of another outstanding achievement. So first, prizes are, as a general rule, shall be subject to 20% final tax, except if the amount of the prize does not exceed 10,000. For example, if the prize is only 10,000 or below, therefore this amount shall be added to the gross income of the recipient, subject to normal tax. For example, if you won on in amateur singing contest and the prize is only 8,000 pesos, so this price, since it's below 10,000, shall be added to your gross income and subject to normal tax because the final tax is not applicable. Okay? So, however, all prizes and awards granted to athletes in local and international sports competitions and tournaments, whether held in the Philippines or abroad, and sanctioned by their respective national sports association, are exempt from income tax. It should also be noted that national sports associations refers only to those sports associations duly accredited by the Philippine Olympic Committee or POC. So again, if you are an athlete, any prize shall be exempted from income tax, whether it's final tax or normal tax, provided that the sport association is recognized by the POC. So, prizes and awards shall also be exempt from income tax or from tax if received in recognition of a religious, charitable, scientific, educational, artistic, literary, or civic achievement, provided that the recipient was selected without any action on his part to enter the contest or proceeding. So, for example, if you are nominated in your church as the model of the Christian youth, and you receive a prize. So since in your part there was no effort to do something, you were just nominated and won the contest, then any prize thereon shall be exempt from the tax. And the recipient is not required to render substantial future services as a condition to receiving the prize or award. As I've said, the recipient that should be unconditional. Okay. However, there are some instances wherein the price is subject to normal tax, therefore added to gross income as other non-operating income. So if the price is again 10,000 or less, there is no requirement to the part of the payor to hold the 20% final tax because such price is not subject to final tax, and therefore the income recipient or the winner is required to file his return and to add this price on his income tax return, on his gross income. And also, if the prices earned outside the Philippines shall be subject to normal tax if again earned by a resident citizen or a domestic corporation. So now let's proceed to winnings. So winnings is different from the prize. Okay? So winnings are the money won by an individual, especially by gambling. Okay, so take note of that. So the applicable tax here is 20%. So as a rule, all winnings, whether it's from gambling or from whatever winnings, all of these winnings are subject to 20% final tax. Even the PCSO lotto winnings, whose amount exceeds 10,000, shall also be subject to final tax. So if you won on suertes or uh, on the lotto winnings, for example, so 80, if the amount of winnings in lotto, for example, exceeds or more than 10,000, then that is subject to 20% final tax. Okay? And also, a winning may be exempted from the tax, especially if this winning is a PCSO and lotto winnings with an amount not exceeding 10,000. So for example, if the PCSO lotto winning is 11,000, then that should be subject to 20% final tax. But if the winning from PCSO lotto is only, let's say, 10,000 or below 10,000, then that would be exempted from the tax, meaning exempted from the final tax and exempted from the normal tax. Okay? So, all other winnings, regardless of the amount, as long as it is not a PCSO lotto winnings, shall be subject always to 20% final tax. For example, if you won on a gambling and let's say the amount of winnings is only 5,000, still that winnings is subject to 20% final tax. Okay? The 10,000 limit or threshold is applicable only to PCSO and lotto winnings. Winnings earned outside the Philippines shall be subject to again normal tax if earned by a resident citizen and domestic corporation. So, now let's compare the prizes and the winnings. So again, we are talking here of prizes and winnings which are earned in the Philippines only, okay? So if the prize or winnings is earned within the Philippines and the amount is more than 10,000, for prizes, that is subject to 20% final tax. And for winnings, same, 20% final tax, including PCSO lotto winnings. Okay? As long as it is more than 10,000, again, 20% final tax. But if the winnings or prizes is earned in the Philippines and the amount is below 10,000 or below, for prizes, this will not be subject to final tax, but subject to normal tax. Therefore, added to the gross income of the taxpayer. Okay? Again, in the case of prize, if it's a prize and the prize is 10,000 or below, therefore it is not subject to final tax, but the normal tax will apply. However, in the case of winnings, still that amount is subject to 20% final tax. Okay? So if it is a gambling winning and the amount is 10,000 or 8,000, still the 20% final tax will apply because it is winning. However, if the winning arise from a PCS or lotto winning and the amount is 10,000 or below, such amount will be exempted from the final tax and from the normal tax. So it will be totally exempted if it's a PCS or lotto winning and the amount is 10,000 or below. Okay? So next we have dividends. So we are still in passive income. So dividends. Dividends are the distribution of earnings to shareholders that may be in the form of cash, stock, or property. A dividend is a payment made by a corporation to its shareholders, usually as a distribution of profits. Of course, the corporation operates with the intention to distribute its earnings into its shareholders, stockholders. So we have first cash dividends. When we say cash dividends, these are the most common form of dividend and usually paid in currency, either via electronic funds or transfer or printed paper or check. We also have stock dividends. So when you say stock dividends, these are those which are paid out in the form of additional stock of shares of the issuing corporation. So, for example, if the corporation is earning but there's no cash available, so the corporation decides to issue a stock dividend, then stock dividend is also a form of dividend. Next, we have a property dividends or dividends in kind. These are those which are paid out in the form of assets from the issuing corporation or another corporation. So, for example, if the corporation is earning but has no sufficient cash and it has enough assets, therefore, it can decide to distribute the assets instead of the cash. Okay? Scrip dividends are issued in the form of promissory note and are taxable in the year of issuance to the extent of fair market value. So this is like a cash dividend, but only it is in the form of a promissory note. These are taxable to the extent only of their fair market value, however. We also have the liquidating dividends. These are the return of the stockholders' investments. So later on, we will discuss how are these dividends taxed in the Philippines. And of course, other dividends can be used in structured finance. So at this point, we will determine how these dividends are being taxed in the Philippines. So if it is a cash dividend, that would be subject to tax. Okay? A final tax. If it is stock dividends, these are not subject to tax because there is no actual profit received by the stockholder, right? In the case of stock dividends, actually, the stockholder only received a certificate saying that the stockholder received the stock dividends. There is no profit on that, so there is no tax applicable. For property dividends, since there is an actual profit received only in the form of property, then again, that is subject to a tax. Same as scrip dividends, but to the extent only of the fair market value. And for in the case of liquidating dividends, there is no tax applicable. Why? Because technically, in liquidating dividends, it is not a distribution of profit, but a distribution of a property of a corporation upon dissolution. Okay, so however, there will be instances wherein this liquidating dividends shall be subject to tax only if the liquidating dividend is more than the investment of the stockholder. In such case, there would be a gain. Okay, so since it's a gain, we will discuss on the capital gain later on. And we have other dividends, and again, these are subject to tax. So we have mentioned that these cash dividend, property dividends, scrip dividends, and other dividends, these are subject to tax. But what kind of tax? So let's discuss what kind of tax are applicable to these kind of dividends. So if the issuer of such dividend, whether it's cash, property, or scrip dividends, is a domestic corporation. Again, take note, the issuer of this dividend is a domestic corporation, meaning these are treated as earned within the Philippines. Therefore, these rules shall apply. So, we have here, if the recipient taxpayer is a resident citizen, again, when a domestic corporation issue a dividends on or to a resident citizen, the rate applicable shall be 10%, and this is a final tax. Meaning to say, before the domestic corporation will give the dividend, whether it's a cash or property dividend, it will first deduct the 10% final tax. Okay? And if the recipient taxpayer is a non-resident citizen, and again, it is subject to 10% final tax. Why? Because the issuer is a domestic corporation. And as a domestic corporation, it is treated as earned within the Philippines. Same goes with resident aliens. They will be subject to 10% final tax. However, for non-resident alien engaged in trade or business, the applicable rate is 20% final tax. Okay? And in the case of non-resident alien not engaged in trade or business, the applicable rate now is 25%. Why? Because again, as I have mentioned earlier, all incomes or almost all incomes of a non-resident alien not engaged in trade or business is subject to a uniform 25%. If the receiver of such dividend is a domestic corporation, meaning to say the issuer is a domestic corporation and the receiver is also another domestic corporation, these dividends is exempt under the intercorporate dividend principle. And if the receiver is also a resident foreign corporation, again, that would be exempt because, again, a resident foreign corporation from a domestic corporation. However, if the a recipient of the dividend is a non-resident foreign corporation, it will depend. It could be 30% or 15%. So, normally, it will be 30% as a general rule. However, if the country wherein such non-resident foreign corporation is a resident, for example, if this corporation had the uh, or is operating in its original country, let's say for example in US, and if that country, the US, is allowing another our own corporations, our domestic corporations, for a tax credit, therefore the same, or if there's a reciprocity, therefore there will be a lower tax rate applicable, and that is 15%. Again, 15% is only applicable if there is a reciprocity, meaning the country wherein this non-resident fire corporation is a resident is also allowing our own domestic corporation to claim for tax credit. Okay? So, we have discussed a lot of things in passive income. However, all other passive incomes not mentioned and earned within the Philippines are subject to normal tax. So, always remember those passive incomes we have discussed are subject to final tax or durable tax. And all the rest of passive incomes that we have not mentioned that are earned in the Philippines shall be subject to normal tax. Any passive income derived from abroad by a resident citizen or a domestic corporation shall likewise be subject to a normal tax. Okay, so I hope you learned a lot from this discussion, and I hope you'd watch the next video. And I really, really hope that you have gained something, learned something from this discussion, although it's kind of exhaustive. Okay, so thank you for watching.